and economic events that we think you need to be aware of. And then we're going to dive into the charts, look at the markets, and look at technical analysis to see what trading opportunities we think are going to be present next year. All right, first, from a political point of view, all right, one of the major things, of course, that we expect is going to be the new president in the US, Trump, of course, claiming the victory in the elections in November last year. So the first 100 days, it's kind of tradition that the press and the public are waiting, without that much criticism or no criticism at all, to give the new president some time to show the direction of his, basically his government. All right, so that is going to be very interesting to see what does Trump emphasize, what is going to be his preferences. Is he going to be repealing or try to start repealing many of Obama's policies, or is he going to maybe focus on something else, like, for instance, the infrastructure project, or is he maybe going to combination? This is going to be very interesting to see what is his major priorities, all right? Now, the internal politics is difficult at the moment in the US. You have Democrats versus Republicans, quite a big battle at the moment, the last 10 years or so. But even between Trump and Republicans, let's realize that Trump is an outsider, from the traditional politics. So although he, of course, is a Republican and he won the Republican ticket, he himself had a lot of trouble and struggles to unite the Republican Party. So we have to see what policies get supported by the Republicans as well, all right? And then we'll have to see what kind of popularity he will keep with the voters. He, of course, presented himself as anti-establishment, but will he be able to keep that sentiment? Will he be able to keep that, basically, that support because he was anti-establishment, or will the tide turn if he maybe doesn't continue with that, with policies that support maybe that anti-establishment image that he has? So these are question marks, and we'll not know, of course, the answers right now. This all depends on what happens in the first 3-4 months of 2017, but at least you got an idea where to keep an eye on. Now, basically, the first goal, I think, for Trump will be gaining legitimacy in his candidacy. It's a controversial candidacy or campaign that he had run, so I think that he's going to try to gain some support, try to turn the numbers of favorability upwards, and I think the best way probably for him to do that is tax plans and economic plans like the infrastructure spending, all right? That will boost the U.S. Inflation and the U.S. economic growth, but it will also, of course, add U.S. debt. Now, the boosting of the economy will give money back to the U.S. government because the economy grows. That means that they'll be able to gain more money from that as well. But net, all in all, the debt should go up, at least according to the experts that do calculations, because ultimately the tax reductions are more than the economic gains. All right, so I don't think that will be a very big problem in 2017, but it's something maybe in the mid-long term, like 2018, 19, 20, that could play a role because now the debt ratio is okay for the U.S., but if it increases, it could get into a more difficult spot, especially, of course, because the GDP in the U.S. is large, so any ratio increase is absolutely speaking a large thing, and who buys that debt? Other countries, and will they have enough money, basically, to buy that debt? So, but that's a problem I think that might occur later on. I don't think in 2017. But one thing is interesting to keep an eye on is the general trend, basically, of anti-globalization, anti-trade. So that's something that we'll have to see how Trump will react to those elements. And that could also slow growth. All right, so we have two kind of factors. One where we see that the tax plans and infrastructure plan could actually boost the economy, but the anti-globalization and anti-trade sentiment could actually dampen that. All right, so two opposite forces right there. That, of course, will also have impact on the NAFTA, maybe U.S.-China relations, how will they develop, How will the U.S.-Russia relations develop? There could be maybe a bit of softening there with Trump, but maybe hardening versus China, as we've seen. So these are all trends to keep an eye on from a political point of view. And also, how will Trump handle the relations with other leaders? Will maybe be a bit of competition there? So far, Trump has not shown, let's say, maybe his side that he can maybe, let's say, handle feedback. So if there would be some dispute or debate, it could maybe spiral to a point that we're not used to with world leaders, right? And that, I'm not saying that will happen, but those are things that might occur in foreign relations, and these are things we want to keep an eye on in 2017. Now, from a central bank point of view, we of course had about a decade where central bank has played a very important role in the markets, in the economy, and they have kind of compensated the fiscal lack, well, not lack of fiscal policy, but let's say replace fiscal policy at least partially at best, at minimum. And that, of course, happened in 2008 when the global recession hit, and as a compensation to make the economy still push forward and not go into a Great Depression, central banks stepped in Japan, in Europe, and the US. And for the first time in the US, we're seeing that the central bank, the Fed, is letting go of the loosening, and it's slowly but surely tightening. All right, now this is important because it's kind of an inflection point. It could be a turning spot for the Fed, but it's at a difficult spot because although the unemployment rate is low, it's below the 5% now, the inflation is struggling to get to its target of 2%. So also basically the wages have not grown too much, and the participation has not grown. So there are conflicting signals in the economy. Plus, if you look at the global situation, there's not been much improvement, right? Europe is still basically not in a tough spot, Japan too, and emerging markets as well. So the Fed is kind of going contrary to the rest of the world, and that could give it basically some trouble. Also, the fact that Trump is president, of course, could stimulate the economy, and that would further fuel reasons for the Fed to increase and hike the rates, maybe 1 to 3 times next year. But there are also some question marks, and I think that the Fed is not talking about that, wants to kind of stay away from fiscal and tax policies. But of course, they're keeping an eye on that, although they're not telling us, right? Because that will have an impact on inflation and whether they can increase those rate hikes indeed. So those are things that the Fed too will keep an eye on. Now you can see in this image that this is the expectation of the Fed and what kind of rate hikes it expects. So somewhere between 1 and 2% for next year and going up the years after. Now that could be trouble for emerging markets. For China, for instance, they are already having trouble with capital trying to leave the country. That could increase. So China would not be happy, emerging markets would not be happy because some of them have US debt dominated. So debt dominated in USD, that means that the debt will become more expensive for them. The impact on defaults, well, there will be more defaults, of course, when their interest rates go up. And in the US, there could be more defaults because of that, and that could be a substantial increase. All right, maybe not at 0.75%, but if it goes above 1%, there could be some bad debt rising in the US and in the world, and that could put some pressure as well on let's say a catalyst of bad debt that goes from one bank to another, and there could be some problems from that. So the S&P 500, I'll talk about that in a second. Of course, as the rates increase, it's not good for the stock market. All right, so typically investors are looking for high yields with S&P 500, but if the U.S. debt is giving them more and more, then obviously U.S. debt is less risk. So that becomes more interesting, and S&P 500 less interesting. All right, we'll talk about that in a second. So if this scenario might give the Fed a bit of trouble, and the question will be if they'll try to combat that. Will they try to reverse some of those hikes, or will they be maybe a bit slower on raising their interest rates than we expect, or the market expects at the moment? So it seems like the Fed is on its course for a lot of increase of the rate, but there are some headwinds there that could spoil such a path, growth path, and maybe things will go a bit slower than the market expects because of the things I just mentioned. And if they do increase, maybe there will be some reverse engineering. I know that's a fancy word, but maybe there will be some ways to target high long-term yields so that basically the interest rates do not increase too fast. All right. Now, looking at the relationship here very quickly between, and that will dive into the charts. So bear with me, just one more slide here. Is very interesting. Let's start with the right image here. These colorful graphs. All right. This is the contribution of the S&P 500 rallies in the past, when there was an expansion of the economy. So the economy was growing. And basically, the blue part shows what kind of contribution the earnings had of companies. So companies were making profit, and obviously they contribute to the reason that the S&P 500 is growing. Very logical. Companies are doing well, S&P 500 stocks are going up. Clear and simple. But look at the green. That is actually basically Fed or central bank, and the S&P 500 rally was partly dependent on that, as you can see, in 1996 to 2000. But look at the last 4 years. Yes, indeed, you see it correctly. A large part, or the majority, far by far, was actually based on the Fed quantitative easing. All right? So the question is, when Fed starts to reduce that monetary easing, will that impact the S&P 500, and by how much? And so that's the main question. Now, as you can see on the left, interest rates and equities, any interest rate basically below the 5%, below this yellow dotted line, any interest rate increase actually did not have a negative impact, but a positive impact on the S&P 500. So you see mixed signals here. I'm sorry for that, but for the moment, it seems I would say that interest rate hikes shouldn't be a big problem for the S&P 500, considering this historical data, as you can see here, below the 5%. When it's above the 5%, then it has a negative impact on the S&P 500. Of course, we are in a different situation than at least in the 3 previous expansions, considering the quantitative easing, the massive quantitative easing that has occurred in the last years. So that might change, of course, what has typically and historically happened before. So I think that my personal opinion on these 2 graphs is that interest rate hikes could give or create dips on the S&P 500. I think maybe shallower dips at start, but as we go higher and higher on that ladder, the dips might get more powerful. I think that maybe is kind of a mixed kind of combination. The uptrend clearly on the S&P 500 visible, but those interest rate hikes could create pullbacks, and that's something you want to be aware of and cautious of. Alrighty. Last but not least, and this is something we're going to be talking about soon with Animal Markets 2, the future of the euro, gloom or glory. Basically, the EU turbulence, of course, is something you want to keep an eye on as well in 2017. First of all, we have the Brexit process. How is that going to happen? When? What costs? In which way? There are elections in France, Germany, and Holland. Will the anti-establishment, let's say, politics continue in Europe? Will the relatively weak performance of the EU in general, but also in specific countries, of course, like Greece and Italy, continue? And will that hurt the support of the EU citizens for the European Union and its project, and will the internal cohesion basically be able to stick together, or will it become more and more of a struggle? And how does it impact the Eurozone currency problems? So this is something that is really a topic on its own, to be honest, folks, and we have therefore a special webinar on that. So I'm going to preferably refer to you on that, because otherwise I'll be talking for another at least 10 minutes. But I just want to give you kind of a sentiment of what things you want to keep an eye on in the EU for next year. There are also other things that, but basically definitely some bearish pressure on the euro, and I think that we'll be looking at the technicals and be seeing that the euro dollar is in a bearish trend, in a bearish mode. So that will most likely continue at least for a while. Other things to keep an eye on: China, how is it going to handle its debt? There is a lot of debt, internal debt there, being shuffled around, perhaps you can say. So that's something to keep an eye on. That does not have to burst necessarily next year, just to keep an eye on it. There's a structuring of the economy from an export-based to more consumer-based, consumption-based. How is that going to work itself out? Is that going to succeed? How much of a shift is that going to occur? And other things from a geopolitical point of view: India and its restructuring of the economy, its investment in infrastructure, for instance, the Iran deal with the US and Trump, Japan, can it slowly grow out of deflation and into inflationary territory? Of course, the political process, but also the war occurring in Syria, just shaping geopolitics in general. And Russia, we talked about it already, the trade embargoes perhaps under pressure there as well. So some things to keep an eye on. Now, if you're interested in the Eurozone webinar, we're going to be talking about what caused the Eurozone struggles. So that answer might surprise you, actually. How can it be fixed? Will it be fixed? What will be the most likely path chosen by the European leaders, and how would the future look like for the euro? So if you're interested in that, just go to admiralmarkets.com/education/webinars. We'll be talking about the future of the euro on December 27th. All right, so hope to see you in that webinar. So, all right, so for those that are not a big fan of, let's say, politics or geopolitics, we're going to dive now into trading the markets. First of all, we're going to talk about US dollar and the fact that we think that the US dollar strength is going to continue in 2017 generally, but also in the first quarter. Isn't that right, Nenad?
Exactly, Chris. So now let's talk a little bit about money making. So first of all, I will now change the screen. So actually now you will see my chart here. I have opened some charts for you guys. The first thing is that actually when we are talking about dollar, first of all, my own view is to always provide some pre-fact analysis. We will also talk about it later, so I will show you results of our trading analysis. We are really, we have a lot of success with pre-fact analysis. Both Chris and I do session recaps. Chris is also having his live trading webinars. And all of those are pre-fact analysis that you can also see. I mean, it's not just a simple analysis like most of the websites show you, usually after the fact or something that happens that already happened. We provide you with clear levels where to actually enter the market, and that is based on our extensive analysis of different pairs. So first of all, I will start with dollar analysis. Here we will see dollar index, and now I cannot, of course, have some long or mid-term impact, but rather short to mid-term that we might expect of 2017 to start. So the start of 2017, I think it will be good to buy dips on dollar. Firstly, because the main thing here is we can see some nice dollar strength. Now this is 4-hour time frame. This is my Camarilla MACD template, and here, guys, you can easily see W pattern. This is W pattern. Very, very easy. This is weekly pivot points. So here we can see that weekly price action has been favoring upside. Also, if you take a look at these rejections here, they happen above EMA 89. My favorite EMA is EMA 89. And W pattern is actually favoring more buy on dips. Here we have an important trend line that we can place here, okay? And also here we have an ascending trend line that is currently going with dollar index. So dollar index is the main Gaussian measurement of price action of dollar basket. So here what I expect is, at least for dollar index, is to actually, now it's between H3 and L3. These small lines are intraday targets, so we are not focused on intraday targets. First, this could be the start of a right shoulder, guys, okay? Right shoulder. So this is, if this will be a right shoulder, so this is left, this is head, this could be the right shoulder. If the price rejects from H3, weekly pivot point on dollar index, we could see that price probably will drop towards this trend line. Here, at this price level, we should see reaction. If it rejects, then probably it will be a failed head and shoulders, leading directly to H4 long breakout. Now, if we see a 4-hour close above H4 long breakout, that will probably mean another spike towards H5. The only thing where dollar index could get in danger is if we see a 4-hour close below L3. So because this is now, of course, short to midterm analysis, pay attention, guys, to 4-hour candles. Open your own charts, put these trend lines like I did, and just watch if it will be for head and shoulders or some rejection from this spot, or it will be 4-hour close above H3, H4, or below L4. This will be strongly bearish. This will be bullish for dollar index. Dollar yen is, of course, buy into dips. I showed many times on session recap webinars. I always provide prefect analysis, and on next webinar I analyze results. So I always show you results of my analysis. I mean, we never hide anything, so you can easily see. Here on dollar yen, we can also see some nice price action, guys. Very, very strong. But watch this. This could be an M pattern. M could be the bearish pattern. But what can happen is, if we don't see a rejection from these trend lines, then yet this will be another spike to the upside. Here we have an X cross with X cross is my I personally developed that kind of pattern. X cross is the cross of a trend line, an important pivot point, or a trend line, an important historical resistance or support. Here we have an X cross that exactly spans here at L3. So if this rejects, this will be, guys, inverted head and shoulders. So pay attention. This could be an inverted head and shoulders. Close above this trend line will be bullish for dollar yen. Okay, now pay attention to what I'm talking about, because this could happen maybe soon. We still need to see. The only thing is that I like to trade. This is not my job, like you say, the job. I love this. I like to trade. I love to teach people how to make money, how to generate profits. So what I think is, the only thing is now we have, of course, we have Christmas, we have New Year. So trading will be probably a bit subdued. There will be a lower volatility in the market. But just pay attention to this. This could be an M, but this could also be like inverted head and shoulders, like this. If it starts to jiggle and go up, this will be very, very bullish, straight from this spot. So watch for any close below L3 or above this trend line towards H3. Any close above this level will be bullish for dollar yen. Generally, dollar yen is buy on dip at this point. Dollar ruble, guys, okay, dollar ruble, I will actually use this chart for dollar ruble. I personally think we will still see what will happen with Trump, and his inauguration, but this is my opinion, of course. I think that sanctions versus Russia could be lifted in next 6 to 12 months after Trump has been inaugurated. So in probably next 6 to 12 months, we should see a lifting of sanctions. This could create a huge impact on dollar-ruble pair, and I think the dollar-ruble could indeed be actually it could be very, very strong for dollar-ruble pair. If that happens, and when that happens, I expect dollar to fall heavily, guys. So I don't know. I mean, I don't know when it will happen. But how things are looking now, at least for what Trump was promising before elections, now I have a strong urge to believe that it will happen. Of course, we still need to see it, but it could happen. In that case, watch for probably trade of the year that will be on dollar-ruble pair. Ruble should get very strong. In that case, you need to open daily charts or even weekly charts. You see, guys, currently it's supported, but if that happens, it could create a huge volatility in this pair where ruble will surge to the upside. Okay? Another pair to trade and to watch for is dollar Swissy. Contrary to euro dollar, dollar Swissy is contrarian pair. So if you trade euro dollar, there is no point in trading dollar Swissy, but because those two pairs have a huge negative correlation. But I simply would prefer dollar Swissy simply because of dollar strength. Okay, simply, guys, because of dollar strength. I mean, euro dollar is a good pair to trade, but dollar Swissy maybe could be even better to trade in 2017, simply because dollar here is the base currency, not a quoted currency. On 4-hour time frame, we can see, I mean, there is nothing strange to it. Euro is going down, dollar is going up, so dollar Swissy is going up. Here we see Adam and Adam pattern, guys. If you don't know what Adam and Adam is, this could be the start of Adam and Adam. The main difference between Adam and Adam and W pattern is that Adam and Adam is supported by now moment buyers. Now, unfortunately, we don't have the time to teach you the most important aspect of price action, that is historical versus now moment price, and that bodies of candlesticks are not that important as wicks. For all that, please visit Price Action Trading School from lesson number 1 on other markets. I explained really huge amounts of time and why wicks are more important than bodies. Here, guys, this is order block here. This is a strong order block, and here we see that now moment buyers are supporting and making potential run as in a form of Adam and Adam. If this happens, we should see a breakout towards H4. Very important pattern, and watch for that. If it doesn't succeed, it should drop below L3. A drop below L3 and confluence with EMA 89 should be a signal for dollar Swissy weakness, and that will mean euro dollar up. My analysis today show that for euro dollar, I am already short, of course, in euro dollar, but in order to remain short, euro dollar should definitely have a weekly close below 1.0470, guys. Watch for this. If you want to see more weakness on euro dollar, it should close below, weekly close, should be below 1.0470. So let's see what Friday will give us. This could expose more weakness to the downside. These are strong order blocks. This is retest pattern, and euro dollar is in a bearish zigzag. And finally, this is dollar Chinese yuan, and the thing is, this is a very volatile pair, so there can be a lot of gaps. You see, there are a lot of gaps in this pair. Why? Because Chinese yuan is also connected to Asian stock markets, Chinese A50 stock market especially. That is one of the most important stock markets, and definitely it moves this pair by a huge extent. Currently is in uptrend, and judging from these whippy charts, I can assume that if it drops below EMA 89, that currently resides around 6.91, it will be a huge drop on this pair. Until then, this is a bullish zigzag. And one more pair to actually show you, it can be found on ECN account, of course. That is the pair that I also like to trade. It's actually Mexican peso. Here, guys, I already gave a good prediction on Mexican peso. I mean, we all know that Mexican peso is called Trump trade. Here you can see a huge boost in dollar, Mexican peso down. So dollar up, Mexican peso down. You see this huge candle, and currently it's being supported by this double top here. So watch, guys, on 4-hour time frame. Watch for this strong candle, strong double top. You see it's being supported there, but if you place trend lines, this is a channel, but you can also place a trend line here, okay, here and there. We all know which pattern this is. I mean, currency traders should know that this is a bullish pennant, guys. This is the flag, this is the pennant, and any breakout above could create a move equal to this flag. So pay attention to dollar Mexican peso. Very important pair to trade. If you have, guys, any questions about this, of course, feel free to ask us. We should now continue with our presentation. Also, these are 2017 trading Forex opportunities, guys. So for me, this is my opinion, I would be looking for euro-dollar weakness, for Japanese yen weakness, because BOJ simply does not like to have Japanese yen strong. It hurts their exports, so it's not good for them, definitely, guys. I will try to explain why it's so important for Japanese yen to actually repatriate back. When Japanese can get cheap credit, they want to invest overseas heavily. So when it's risky, they bring the money back, creating the demand for yen. And vice versa. When it's bullish equities, they pump their money overseas, which means they sell yen and buy foreign currency, guys. Usually what happens with Nikkei is the yen appreciates first, risk off, and then next day Nikkei gets hammered because yen is more expensive. It affects their export manufacturing sector in the Nikkei index. So euro weakness, Japanese yen weakness, GBP volatility caused by Brexit negotiations. Okay, we might see a lower low then bounce. Of course, ruble trade, pay attention to Swiss yen also, and definitely Australian dollar, New Zealand, and dollar Norwegian crown. For me, euro dollar New Zealand is very interesting pair to trade, simply because Australian economy, guys, is stronger than New Zealand economy, in the sense that Australian dollar is a hard commodity currency, while New Zealand dollar is soft commodity currency. Australian dollar is linked to iron ore, copper, and gold, while New Zealand dollar is linked to dairy products and milk. Here, guys, on a weekly time frame, if you zoom out, you can see head and shoulders. So this is indeed support. Okay, this is indeed support. So I expect bounce from this potential area here, simply because, as I say, fundamentally, Australian dollar is stronger, but also don't forget that we have also technical patterns that also fortify my view on this pair. Also, I might take a look at dollar Norwegian crown. So here is the chart, dollar Norwegian crown. Here, guys, you can see that we have a huge spike here. This is called ascending scallop pattern here. you see, form like J shape, ascending pattern here, and if you put a trend line on this order block, this is bullish order block, the height of a bearish candle prior to the move up, this is bullish order block. You see, this is not just a simple rejection, this is order block rejection within ascending scallop and double bottom, guys. So until this double bottom is broken, I expect more upside to dollar Norwegian crown. Trade this pair. This can give you huge amount of pips because its range can be pretty much good. So pay attention also to this pair. Don't just trade major pairs. Try to trade something that will really give you great trading opportunities. Also here, gold markets, I will be quick with this because we still have a lot to cover. Chris will go from the next slide. So I will just mention gold market. Definitely, guys, in 2016, gold has been weak. We all know that euro is supported by gold and dollar is supported by oil. Okay, definitely gold has a huge impact on gold. It has political instability, okay, because gold is also seen as a safe haven, okay, safe haven. Then we have central bank policies that can also move the metal, okay, and definitely there is search for alternatives, guys. Bitcoin can be very interesting for us. I will definitely continue to follow Bitcoin because it's a cryptocurrency, and at this point I see that more and more demand is for Bitcoin, okay? So there could be really a search for alternatives. In 2017, we might see, guys, a gold bounce. Simply said, gold is a metal that has been always mined from. Now, I don't have the time to talk about ancient empires such as Sumerian Empire, Egyptian. They all mined for gold. Okay, the first mines in gold in our planet were actually in South Africa. Now, if you compare those ancient times with modern times, there has been always, and will be always, a huge demand for gold. Huge demand. On weekly chart, we can see that really gold has been dropping heavily. But guys, look at this. It's very close to support. Okay, so this is support area. So if this continues with a drop, we might see a sort of bounce. Because at this time, you see, there was a huge spike and now gold is moving down. But don't forget, this was high, this was low. All this was lower highs and lower lows. And here, guys, we actually see that now we have a trend line, ascending trend line. So this is low, now this is high. Let's see if gold will bounce, but I might expect a bounce soon. So Chris, do you have anything to add on this?
Well, I just indeed, with regard to gold, I think that it's an interesting spot, so close to the support, and it doesn't have to bounce, of course, all the way to a new high, the high of 5 years ago. Certainly not. When we say a bounce, as Nenad showed, it could be just a simple 1, 2, 3 rally, and the third swing, the third rally could be just as big as the first one, which will take gold maybe not very far compared to the previous high, but that could be enough already for a substantial move. Let's see how the gold handles itself with regard to that potential political instability. We'll find out if things remain calm. Maybe gold will not bounce, or we'll have just a shallow bounce, and then in that case, the interest rates on the U.S. will be going up, and that will make gold less interesting. So perhaps in that case, if price breaks through the bottom, there will be more downside. So very important in any case to keep an eye on that bottom. That's for sure. Bounce or break spot. Regarding the stock indices, talked about that already. Basically, S&P 500 in an uptrend, higher high, continuous trend now at this moment. So we have to see the U.S. deregulation potentially there coming up. That could boost it. The stock market, especially the financial industries, the pharmaceutical industry, tax cuts, will be good for big corporations. They could bring back some capital, and also, of course, good for individuals, right? So there could be more money to spend. That should boost the economy in 2017. Now, we'll have to see what kind of debt that creates and what impact it has in the medium term. But for 2017, that should boost it. And there should be a fiscal boost as well with the infrastructure. So these are all things that will be supporting the stock market. And if Fed maybe does not increase the rate hikes so quickly, maybe only one next year or two next year, then that should be support too. If it increases 3 times next year, that should have some break on the stock market. All right, so something to keep an eye on as well. And but eventually, of course, there are people that are talking about a potential bubble in the stock market, and I don't think that will happen in 2017, at least not the first half. But yeah, you can see maybe some first signs of, or not first signs, but you can see maybe some continuation signals that in the medium term there might be a stronger correction on the S&P 500. For instance, if the interest rate hikes continue in 2018, if the infrastructure project doesn't materialize as expected, or is not as grand as expected, or the tax cuts are not stimulating the economy as much, for instance, those kind of things. Of course, we'll have to see how those policies that are implemented in 2017, what their effective impact is, and how they stimulate the economy, and therefore also the S&P 500. All right? So, that was my 2 cents on the S&P 500. Nenad, you want to add something regard to the stock indices in general? There's a question about the Deutsche Bank, if that's a pivotal issue, and will it be allowed to fail? I personally don't think it will be allowed to fail. What do you think?
Yeah, I actually just give the answer to the question, provide the answer.
Sorry.
Yeah, basically, I said I was very worried about Deutsche Bank because it's only worth. I mean, it was like 17 billions, and the last price that I was looking at, and it was like 40 billions. Whatever the case may be, they had a major loss. Okay, and they also had their derivatives exposure the size of Germany's GDP times 7. Also, they have a very high CDS rate, and in other words, the banks rate them the highest to default. So it is indeed, David, a good question. It is indeed a cause for concern. It could be another lemon in waiting, but I hope it won't happen, really. I hope. Now, I mean, we are already now close to 1 hour full time. We still got, guys, a lot of things to cover, but let's just mention industry specifics. Guys, you already know that there could be some FCA regulations and SISEC regulations that could tighten an impact on the industry. Okay? What I can say about it, the proposal for 2017 is leverage 2 to 25 or 2 to 50. I provided some interview with the other website, and they asked me what I think, are there any persons to follow closely in 2017, and I said only FCA board, because FCA board will probably cut the leverage on Forex and counter for differences. And the thing is, don't be afraid of this. I mean, I would personally still like to be like 1 to 100. That would be basically the best optimum between cutting the leverage and gambling, right? Because traders simply, they misuse leverage. But if you explain what leverage is, the way we explain, all traders, guys, then even 1 to 100 is a safe bet. I can guarantee on that, really. I have account statements on 1 to 100 leverage, 1 to 5, 2-year-old account statements that prove that trading with that leverage can be profitable. If they drop the leverage to 1.25 to 1 to 50, I mean, you will still need a little bit more of deposit, of course, in order to trade. Like some accounts will probably need a higher deposit amount, ECN accounts also. But the thing is, you will still be safe, because my way of trading is I trade with a low risk. Remember this, what I'm saying to you now. There is a holy grail in Forex trading. And the holy grail is not a system. It is having a good system, but the holy grail is money management. Remember this. This is the holy grail in Forex trading. So if they drop leverage, we still will be making some profits, guys. Don't worry about it. Risk will be lower. I personally hope for 1-200, but let's see. Also, guys, we need to say that we are providing a lot of analysis. I have my personal thread on Forex Factory by the name Tarantula, and on Forex Factory, my thread was also it was visited more than 4 million views, and then I moved to commercial section. But the thing is that Forex Factory has been also one of the websites that I started my career. Here I am, and I really have a lot of good comments. I mean, I've been posting there for a huge amount of time. Also, guys, I will show you that, of course. Let me just show you the screen. Okay, here, this is my screen. So, see, this is my thread. We are also posting there. Also, some things that are important, you can also ask us there. Also, we have good reviews on Forex Peace Army. We received the UK Forex Award for the best broker. I was nominated for the best speaker. We were attending a lot of seminars. So we are real, guys. And we will always update you on real things. So don't worry about it. Just to let you know, we are there to help you. And whatever, guys, you need, any help or question, don't hesitate to ask us. We will cover now, Chris will tell you about very important thing. It's so-called MT4 Supreme Edition. He will start with volatility protection settings. This is unique in Forex market. So if you trade with us, of course, you will be able to use volatility protection setting, a tool that should safeguard your account in volatile times. So, Chris, you can explain it?
Yeah, actually, this is the part about the MetaTrader 4 Supreme Edition. Folks, that's really a lot of extra features there on top of the MetaTrader 4 package, where you have, of course, your typical things you already know, right? This has a lot more than that. 60 extra features, in fact. For instance, a trading simulator, so you can backtest. A tick trader, advanced indicator package are part of that MetaTrader 4 Supreme Edition. But there's also volatility protection settings. That's extra, in fact, besides the MT4. And we'll dive into both of those. First of all, the Supreme Edition. So what are those extra things, basically? So, well, as you can imagine, it's a bit too long to discuss it all here, but basically you have a correlation matrix, so you can see how correlated are the currency pairs with each other. So you can see if it makes sense to trade various instruments or not, because if it's strongly correlated, you know, it's basically taking the same risk or the same trade. There is a sentiment trader, just to give you an idea about what the market is thinking, about the direction, or maybe not the entire market, I should say, of course, but about the traders there that are connected to this sentiment trader. Alarm manager, that's very cool. That's one of my favorites because you can basically tell the program, at this point, I want to be alarmed, I want to be warned about the developments, what's happening regarding my account, the market, price movement, price points. So that's something that is very, very useful. Mini Terminal is basically helping us with the management of trades. It's a quick way of taking trades and also calculating risk and managing those trades. So it's extra feature right in, and Nenad was already showing that in the screenshots, in fact, in images. It's an extra tool that's right in basically the screen. All right, so those are just a few of them, but there